Hi and welcome to Westpac London's end of day report for Thursday, September the 22nd. It's another hugely negative day for risk. Equity markets right around the Northern Hemisphere have absolutely tanked today. We saw European markets selling off on the late sell-off in the US market yesterday, reflecting the Fed's assessment that there were significant downside risks to the US economy. But at the same time, the policy they put in place, the initiative, the Operation Twist, although it involves holding down long-term bond yields, at least that's the objective, it does it by buying long-term bonds in exchange for selling shorter-term bonds. This isn't like the quantitative easing packages 1 and 2 that the Fed put in place, where they actually expanded their balance sheet, effectively printed money. That's what led to equity markets doing so well during those bouts of QE, because a lot of this cash sort of leaked out into other asset markets, commodity markets, equity markets and so on. And so investors, I think, were hoping for something more of the same. Maybe not this week, but certainly down the track. But with the Fed saying that the risks had increased significantly and not putting in place any genuine balance sheet expanding quantitative easing, investors really took fright late yesterday in the US. We talked about that briefly when I did yesterday's report. Things sold off after that even further, and in Europe they've continued to be marked down. Equities have continued to be marked down sharply. On top of that, we had the third consecutive sub 50 reading on the Chinese manufacturing PMI, which is an indication that the Chinese economy may be slowing. That didn't help. We saw, for example, Rio Tinto marked down something like 9% in London trading today. Then we had the European equivalent, the manufacturing and services PMI advanced reading for September. Put them together and the composite PMI fell below 50 for the first time in more than 2 years. The last time it moved below 50 was in May 2008, and of course the second quarter of 2008 subsequently proved to be the first quarter of contraction in the European economy. In other words, the last time we saw a move on the composite PMI like we saw today, the last time we saw it, the economy was entering recession. We also had a steep fall for the third month running in September consumer confidence for Europe. The 3-month fall there almost matches the 3-month fall we saw in 2008 when the European economy went into recession. So all of these signals have been upsetting markets. The Fed, the data on Europe, the data on China, they're the main things to mention today. All of them together have meant that European markets saw, for example, with the FTSE down 4.2%, the French market down 4.4% and the German market down 4.6%. The losses are actually over 5% at one stage. This is at 4:15 in the London afternoon, so there's still a little bit of trading still to go, but the equities really have been trading very heavy all day. Other things just worth mentioning on the data front, industrial orders, we saw a 2% fall in July in Europe as well. Not unexpected because we already had the weak German component. Moving on to the US, on the data flow there we saw a 9,000 fall in the weekly measure of unemployment insurance claims, but still an uptrend, excuse me, an uptrend does seem to be discernible there, suggesting the labour market might be softening in the US. A few other minor bits of data there. In Canada we saw a fall of retail sales in July of 0.6%, but really it was just about the ongoing reaction to the Fed. And the Dow, as I'm speaking at the moment, is down 2.9%, the broader S&P measures down 2.5%, and the Nasdaq's down 2.1%. This risk-off attitude in equity markets certainly flowed through to commodity markets. Every single commodity of the 19 I'm looking at here is negative today, ranging from, let's see, natural gas down 0.2% to silver down 9% today. Crude oil's down 4.7% at $81.90 a barrel. We've got gold down 4.4% at $1,728 an ounce, and what's the other one? Copper is, where is it? Copper's down 6.5% too, so big losses there. I mean, there's that copper price decline that partly explains the big losses in the mining companies on the UK market today, and is also related to the weakness that seems to be creeping through into some of the Chinese data. The Aussie dollar, actually we were below parity today. Actually, can I have an Aussie rate please at the moment? 97.70. Did you hear that? The Aussie is at 97.7 US cents. So it's actually, that's a couple of cents below parity. I can't believe it. You turn your head for 1 minute and look what happens. Whew. I'm actually pretty flabbergasted by that. Look, we've got the Reserve Bank's Financial Stability Review, nice timing for them, coming out today in Sydney time, and I think I'm just going to leave it there. So much to get your head around really today, and I'm sure there'll be plenty more tomorrow. And notice I didn't mention Greece once. Okay, bye.